Priyanka, Assistant Professor, PG and Research Department of Commerce CA, Commerce and Nutrition Science College, Satyamangalam. Next, now we'll discuss about topics is functions of commercial bank. Next, one by one we will discuss about meanings, definitions, functions of commercial bank. Next, types of checks. These are the topics is we discuss about these topics. Next, what is commercial bank? A commercial bank's main jobs are to accept deposit and also lend money to commercial banks. Mean some main job or accept deposit and lend money is called commercial bank. There are three kinds of deposits: saving, current and times. A commercial bank's two fundamental qualities are lendings and borrowing. The banks accept deposit and distributes funds to the various entities in order to generate income profit. The borrowing rate is the rate of interest that a bank gives to deposits, while the lending rate is the rate at which a bank lend monies. The commercial's main jobs are accept deposit and lend money. There are various accept deposits: savings, current and times. These are the commercial banks accepting jobs. Next, functions of commercial bank: primary functions, secondary functions. The main functions is primary and secondary. What are the primary functions? The 8 types of primary functions. First one, accepting deposit, then saving deposit, fixed deposit, current deposit, loans, credit creations, cash create, short-term credits. These are the 8 different types of primary functions. One by one. First one, accept deposit. Accept deposits means customer can put money into commercial banks through saving, fixed and current deposits. Customer can put money for saving, fixed and current deposits. The accepting deposit. Next, saving deposit means a customer can add money to their account up to a certain limit with the saving deposits. People with a fixed income like these deposits because they held their save money over time. The saving deposit. Next, fixed deposit. Fixed deposit means with a fixed deposit the money is locked in for a certain amount of time. Fixed deposits are also called time deposits only for the time consumed because the money is put away for a certain amount of time. So the money locked in the certain amount. This is a fixed deposit. Next, current deposit. With the current deposits, account holder can put money and take it out of their accounts whenever they need to. People and business can sometimes get overdraft to a certain limit with their current accounts. And most of the business people have the current deposits used. Next, loans. Loans means one of the main things commercial banks do is the lend money to the business and peoples, and they have make money off the interest they earn. Usually banks keep a small reserve to cover their cost and give the rest of the money customers in the form short-term and long-term loans. Where the commercial banks provide short-term and long-term loans they have provides. Next, credit creation. Credit creations is something that only commercial bank can do. Only for the commercial bank we can do. Instead of giving out cash, banks create a line of credit and give the loan to a business or commercial body at once. Commercial banks offer both loans and withdraw collateral. Next, cash credit. Cash credit means one of the things that commercial banks do is they lend money to people and business against bond, inventory and other types of security. These types of credit, which is often called cash credit, give you a bigger amount than other types of credit. Next, short-term credits. Short-term credits loans are usually given without collateral and loan amount and length of time to pay it is back or small. Personal loans is the another name for this kinds of loan. The short term only, short paid year. These are the primary funds. Next, secondary funds, providing locker, dealing with foreign exchange, exchange of securities, bill of exchange, bank as an agent. These are the secondary functions. And one by one, providing locker. Customers who want to save place to store valuables can rent a locker from a commercial banks. The valuable means any amount, jewelry, any of document we can valuables. This used for locker from a commercial bank. This risk of theft or loss in limit when things are kept in lockers instead of at home. Next, dealing with foreign exchange. Commercial banks help people and business that export or import goods from other countries get foreign exchange they need. But only certain banks that are licensed to deal in the foreign exchange can do these kinds of deals. But commercial banks is almost export or import for other countries. Next, exchange of securities. Commercial banks also buy and sell bonds and other securities. Only exchange import or export means and other securities is possible. Customers can buy or sell the unit directly from the financial institution, which is easier than the other way to do it. Next, bill of exchange. The main job of a commercial bank in the modern world is to discount business bills. It's also likes the moreover people like for business bills, discount business bill. Bill discounting is the seen as a good way for banks to make money. Bill create a steady flow of money, but when they are paid, they are not a risky investment because they can be changed. The financial institutions is also not involved in any court cases. Next, bank as a agent. Commercial bank, it is a functions also required them to give customers financial service, which is what an agent does. Most of the times, the service include acting as an administrator, trustee or executors of an estate that belong to a customer. All over any business is the agent is the main role. Helping a customers with their tax returns, tax refund and other tasks that are similar. These are the secondary functions. Next we will discuss topics. Another topic is check. What is check? A check is a bill of exchange where the drawer instruct his bank to pay a specific sum of the payee or anyone holding the checks. The customers used checks for the different needs or purpose. The bill of exchange only specific sum of payee or anyone holding checks. Next, types of checks. Bearer checks, order checks, crossed checks, open, post date, stall, self, traveler. These are the types of checks. We see one by one. First one, bearer checks. A bearer checks is the one in which the payment is made to the persons bearing or carrying the checks. The checks are transferable by delivery, that is, if you are carrying the checks to the bank, you can issue the payment to. The bank need no authorizations from the issuer to be allowed to make the payment. How can you identify a bearer checks? You know it is a bearer checks when see you the words are bearers printed on the them. You can printed on the them is the bearer checks. Next, order checks means to put the order. In these checks, the word or bearers is cancelled. In the checks is the order checks means bearer cancelled. Such checks can only issue to the persons whose names is mentioned on the checks. That persons only the check all details, and the bank will do this background check to authenticate the checks bearer identify before releasing the payment. To check the all activities only, then only we can before release the payment. Next, crossed checks means you may have observed checks with two slapping parallel lines with the words account payee returns on the top left. That is called crossed checks. This line ensures that irrespective of who presents checks, the payment will only be made to the individual whose names is written on the checks. In other words, their account payee along with his her account number. These checks are relatively safe because they can be encashed only at the drawing bank. This is the word of account payees is the returns on the top left. This is that is crossed check. Next, open checks means open checks is basically uncrossed checks. These checks can be encashed at any bank and the payment can be mailed to the persons bearing the checks. This checks is transferable from original payee to another payee too. This is the open checks. Next, post date checks means these types of checks bear a later date of being encashed. The later date of being encashed the post date checks. Even if the bearer presents the checks to the bank immediately after getting it, the bank will only process the payment on the date mentioned in the check. This check standard validity past the mentioned date but not before. Only post date means the later date of being enclosed and mentioned validity date. Next, stall checks. A checks post it is validity 3 months after the date of being issued is the stall checks. Next, traveling checks means foreigners on vacancies carry traveler checks instead of carrying hard cash, which can be customers. These checks are issued to them by one bank and can be encashed into the form of currency at bank locked in another locations or country. Traveler checks do not expire and can be issued for the future trips. To traveling purpose only we can issue the checks as travel checks. Next, self checks. You can identify self checks by the word self returns in the drawees column. Self checks can only be drawn at the issuer's bank. Next, banker checks. A bank is the issue this type of checks. The bank issue these checks on behalf of an account holder to make remittance to the another persons in the same city. A specified amount debited from the bank account of the customers and then checks is issued by the banks. Only bank checks in the same bank account. The validity is for the 3 months. They can be revalued provided specific conditions are be made. These are the types of checks. Thank you.